I got this question. Oh, this was interesting. This actually comes up from time to time. When is an organization too big for QuickBooks Online?
Oh, good one. Yes, that does come up all the time.
I have opinions.
Yes, carry on.
I have 4 opinions on this. Number 1, QuickBooks Online as a platform for smaller organizations. What does that mean? For the moment, doesn't matter. Smaller. It has features and it lacks other features, right? I mean, it's not like IBM isn't going to come in and start using QuickBooks Online to track their operation, right? QuickBooks Online lacks features that exist in the world. That's okay. That's by design. That's why they charge what they do and not, $50,000 a month.
Right.
They charge a couple $100 a month or less. So one example of such features is dimensional reporting. So you compare QuickBooks Online to a package like Intact. They're both cloud-based. One is owned by Intuit, one is owned by Sage. And QuickBooks Online has 2 tags that can be added to every transaction besides the income or expense category. One is called class and one is called location. So those are tags, those are dimensions. Intact has a boatload of dimensions. So if you've got functional expenses, if you've got location, if you've got department, if you've got line of service, if you have, you can track a lot more dimensions of your organization with a platform that has more of those fields available. So when your organization has grown in complexity and there are more things that are worthwhile to track, then you've outgrown QuickBooks Online. I also have, that was more fact-based. What I'm about to assert now is definitely more opinion-based. QuickBooks Online has more outages and bugs than a lot of other comparable platforms. And once your organization grows to the point where there's something really at stake, you don't have time for the team to fix the bugs, or you don't have time for the team to get the platform operational again. If you get to the point where time is a factor, then you can't afford for the platform to be down. Then you've outgrown QuickBooks Online.
Yeah.
I don't assign an organizational size to that, but that's the question. If you can't afford for the platform to be down for any length of time, then it's time to move to a more stable platform. Third-party apps. If there are mission-critical third-party apps in play, or you want to put them in play, but they don't integrate with QuickBooks Online, but they do integrate with some other accounting system that will serve your organization, and if no such integration with QBO is planned between that third-party app and QBO, it may make sense to say, you know what, these apps are so critical, we need to move to a different platform, one that does integrate, or if there aren't any good workarounds. Sometimes there can be pretty good workarounds, export something from the other system, come from a macro, click it, upload it, that's right. Fine. But those workarounds aren't always available or possible.
Yeah. And if you have too many of them, then it sounds, whether it's QuickBooks Online or any other platform, like once you have too many workarounds, like, I got to download it, and then I got to store it, and then I got to yeah, maybe it's time to move. That's an accounting term, hootie-ha. But like the more you have to, whatever accounting system you have, the more you have to like manipulate the numbers, where, in a perfect world, you just want to be able to hit that button, hit print. And the more that you have to do after, it's like, maybe it's time to move to the next level, whatever platform that is, yes.
Well said. I completely agree. My fourth point is also a matter of opinion. But a lot of people, we're in communities with a lot of accountants. I'd say more accountants are talking about this than non-accountant business owners and nonprofit leaders. But there are a lot of accountants who have expressed dissatisfaction with the way that Intuit does business.
Yes.
and are moving away from the platform, not because of a technological consideration, but because of what they are, of their opinions about how Intuit treats the accounting community, how Intuit treats the end users. I share those opinions. I don't like the way that Intuit does business. And as such, as a firm, although we do still serve a few clients on QuickBooks Online and a few clients on QuickBooks Desktop, as a firm, we are moving away from Intuit and toward other platforms that serve our clients just as effectively and efficiently, in some cases more effectively and efficiently. And we feel good about making that choice for those more from an ethical standpoint. So Intuit still has a boatload of market share, and that market share has been well earned, fought for. It's just that they've made some decisions, one after another recently, and that a lot of accountants don't stand behind. And
yeah.
Go ahead.
Oh no, I was just gonna say, yeah, ethics is a big one. Whatever, if you're not satisfied with something, and and you feel strongly about it, for client's sake, for your sake, it's time to move on. Change is good.
Yes. If you hear a CPA saying change is good,
yes,
it's time to perk up the antenna.
Yes. And I wasn't even speaking as a CPA, just I forgot, but just in general. This was from a personal.
Wait, I forgot I'm certified.
Right, sorry. Yeah, but change is good, mathematically as well.
Beautiful.